Hello, everyone. This is Mukesh Goswami, and today I'm gonna uh, talk through some of the investing opportunities that my organization has come up with. So, a brief about me. Some of you already know me, and some of you who don't know a lot about me. I come from a technology background. I had been in software industry for last 27 years. Did multiple startups myself, all in technology space so far. And I had been a very active real estate investor. And so far, all my investment had been mostly driven by my own individual pursuits. But now I am kind of broadening my horizon. So let's talk about real estate. I believe it's a term that you can either hate, you can either love, but you cannot ignore. This is something that once in a while everybody dreams of owning a piece of real estate, and sometimes we follow through, sometimes we get intimidated by the nuances involved, but by far this is one of the largest contributor to passive income. So across United States, I believe people do rely on real estate to generate passive income for themselves, and also this is one of the most dependable source of retirement income for people. And people also plan for contingency funds, stay put in real estate. And no doubt, this is one of the most traditional and conventional methods of passing wealth to next generation. So, in one way or the other, you are connected to this space. So why not focus a little bit more and understand this domain in a bit deeper so that we possibly can leverage whatever we know and whatever we can possibly learn more. So today's agenda is basically I'll be speaking for about 40 minutes, and I will try to provide a quick background of why this whole presentation. Then I'm going to talk about our company that I launched about 6 months back, and then I'll talk about the opportunity that I present, or the company presents to all of you. With that, after 45 minutes or so, I'll open up for question answers, any tangential discussions, and anything that we can kind of contribute together. So a bit of background. So let me give you a perspective of what had been my forays into real estate and how this connects to the forward journey. So overall, I do position myself as a chain breaker and disruptor because conventional thinking is no more my forte. I, having founded multiple startups in technology space, and having led so many product disruptions, I believe thinking in an unconventional way and probably breaking the existing norm. So that's what I had been. And in last decade or so, I have emerged myself as a true remote investor. So while there are a lot of people who do invest in properties and they do invest next door or something that they can directly, indirectly manage, my model of investment had been a truly remote one, and I have spread myself across 10 plus states. I sometimes lose the count of how many states I'm spread out, but uh, easily it's more than 10 states that my properties are located. And believe it or not, I don't connect emotionally to my properties. It's purely financial prudence that prevails. And I leverage technology to buy, I leverage technology to evaluate, I leverage technology to manage. I don't really visit any of my properties. In fact, I haven't seen any of my property uh, through my naked eyes. I have never set foot in my properties during operations, during buying, or even during selling. So I do everything remotely, and I do self manage. This is probably breaking the norm where a lot of people manage through property managers or manage their properties themselves, but they are next door to that property. So I'm still remote, I still manage, but I leverage technology for doing all of that. I leverage the very good boots on the ground philosophy where the talent available and all kind of skilled people are available on the ground. You just need to find the right one, and you need to have the means and methods how to connect to those people to get your work done. So that's how overall mixing my experiences, my intellect, smart technologies, and kind of very craftily created business model, I created a growth engine for myself. And that growth engine is the kind of backbone of my whole real estate entrepreneurial journey. And this is what is giving me the guts and motivation to kind of scale it up. So while there had been a lot of experiments, there had been a lot of learnings along the way, but eventually I did set up a portfolio that delivers a very very healthy return for me. So there is no exaggeration here, but plain truth is that I still am managing cash on cash yield of more than 15%. And trust me, most of the real estate yield which we get as a profit is tax exempted to a very heavy extent. So, literally, most of the profit that you generate from real estate is tax exempted. I do 1031 exchanges as well, which leverages deferment of your capital gains. And I have achieved successfully 2.5x equity multiple in 3 years kind of timeline. So those are some of the very hard numbers that probably best of the best people are struggling to achieve. But I'm not going to kind of exaggerate it. But yes, this is a proven method and process that I have built over a period of time, and I'm using technology to achieve what I have achieved. So where this takes me next? So I have done a lot of baby stepping into whole of this journey. Now I think is the time that I want to convert all these baby steps into a giant leap. And when I am taking for this giant leap, I don't want to be alone. I do want to take you guys along with me and probably pass on the benefits to the masses rather than just keeping it to myself. So my philosophy is that collection of mindshare is always bringing diversity in thoughts, bringing synergy in actions can do wonders. So a collective wisdom and a pooled capital can do wonders. So it can scale to a level where individually it is almost impossible to scale. This kind of pooling will probably unlock the same avenues that I had been utilizing for myself. It will unlock it for the masses. It will unlock it in so easy manner for others that probably most of you may rely more on passive income and less on your W2 income. So pursuing passions fearlessly is one of the motto for everybody, but the kind of ecosystem doesn't allow you that unless until you create a healthy passive income. So that's my aim, that eventually we should be able to enjoy our passions fearlessly. And obviously it's a very conventional thinking pattern that whatever we create as a footprint, our kids and our next generation probably should start from that footprint onwards rather than they do the full circle of learn, earn, and grow. They probably can start from a above the pedestal foothold, and that's where this whole setup is going to generate the wealth that can be passed on to the next generation, and they can start the journey from a higher point than where you started. So what I did is, it's about 6 months now. I co-founded US Rain LLC, a real tech startup. It's a fusion of technology and real estate, and keeping all along the financial prudence in mind. So I created this startup. There are four other people who are founders along with me. So together, five of us are bringing the required diversity and required mix of experience in technology, real estate, financial worlds, corporate matters. So I think we have found that common ground to work together and create this magic. So this takes me to a stage where I am able to offer an opportunity to all of you to join me. So I now invite people who are like minded, who want to build passive income, who want to probably enjoy their passions fearlessly. Come and invest in this company so that you can leverage the whole game plan that we have been leveraging individually. So, talking a bit about the company itself. US Rain LLC is the company that five of us own, and is the brain behind the whole ecosystem that we are going to create. But we are now launching US Rain Fund, uh, in short URF, and this US Rain Fund is basically a uh, kind of epitome of collective wisdom and uh, pooled investment, so that we can jointly own real estate, and individually all of the investors can own a piece of it without getting involved into the hassles of managing it. Our focus is purely and purely on multifamily apartment portfolio, and it is a diversified multi-family apartment portfolio. It is not any single asset. So, giving a bit brief about what exactly is this fund. Uh, as I believe, this is a trailblazer. Trailblazer in the sense that it is not following the same conventional methods that many others are following. We are breaking the norm, we are disrupting the realm, and we are probably pioneering in many different aspects. While all this innovation, while all this thinking is more into how of things, but what of the things is still the very brick and mortar multifamily apartment. And it's not one apartment, it's a portfolio. It's basically a growing pool of properties that will be owned by this fund, and all of the people will be owners directly into that portfolio. So, the key difference between this versus a single asset syndicate is that this offers you the internal hedging of the risk associated with a single asset, as well as the benefits of high ROI and optimized overheads of expenses in a portfolio versus a single asset. Eventually, the goal is it's empowering our members who joins this journey. It empowers the whole ecosystem to take that giant leap where you can enjoy the passive income, you can build your wealth for long term, and you can enjoy the freedom to do whatever you want to do in your free time. And again, I will reiterate one time more that we are definitely doing it differently. Our methods are different. So the very differentiating competitive advantage is coming from our proprietary platform, the Rain Growth Engine. It's a technology, process, people mixed kind of platform that is breaking the norm and doing things in an unconventional way. So by leveraging this growth platform, I hope that we will be able to deliver better yield and minimize the risk for the overall community. Talking about our long-term growth strategy. So, as I personally figured it out that you need to follow the principles of a rocket propulsion in general to grow. So, URF is envisioned as a continuously growing fund, and it will take leaps every few years in terms of like propelling the whole ecosystem from one horizon to another horizon. And in each leap that it takes, it will significantly improve the quality of its assets and the operations. So while nothing is a kind of a hard commitment on the ground, but the strategic thinking is that we will shoot for $100 million kind of investment portfolio in our first horizon, and then we will optimize our processes, technology, so that we can jump and take a leap to $1 billion portfolio, and then we take it from there to a mixed portfolio of multiple different kind of assets, and that's a kind of longer term growth strategy. uh, how does that strategy gets delivered? It's get delivered by following a three pillar process within our growth engine, and this is what is our next generation operations platform. It is leveraging a backbone of technology, leveraging the people and their network, and then carefully crafting the processes. And we are using a lot of artificial intelligence, machine learning, conversational AI, and kind of image recognition, and kind of uh, 3D virtual reality kind of technologies, so that we can do better inspections of our properties, better uh, kind of management of our maintenance issues, and leverage the data science behind it to optimize the operations. Our network of realtors, our network of on the ground maintenance staff, our network of lenders, and all kind of professionals give us the strength that we can get the same thing at a lesser price and in a faster turnaround of the whole thing. So this basically expedites every bit of the machinery, and at the end, it's still a kind of entire fulcrum of the process, but it's expedited and optimized. At US Rain Fund, we follow a four-stage life cycle, and our belief is that ideally we should be able to churn over any single assets within a 5 to 7 years life cycle. So every single asset will go through a cycle of acquisition, elevation, operation, and liquidation. So we are aspiring to liquidate every single asset in a time frame of 5 to 7 years, and that liquidation will give us a fuel for jumping into the next horizon. So rather than forcing this liquidation to kind of uh, forcefully return the capital to investors, we will create a flexibility where if you want to take a capital back, you can take capital back. But if you want to invest further into the next leap of the whole engine, then you can take that forward. So it's a perpetuating kind of investment model where you have exit points designed for you at your own convenience. Our acquisition strategy is very, very solid. We don't want to just buy anything and everything that comes our way. We want to be very, very peculiar about what we buy, and we very consciously select properties that are in landlord friendly states where the property taxes are low. The county and the city and the state rules are simplified for landlords, and our focus is only on class A and class B properties, wherein we can also buy selective class C properties. Class A and B basically gives you those kind of properties which do not require immediate capital investment or immediate renovations or upgrades. These are better quality tenants, better quality kind of outlook of the property, so that you don't invest in kind of flipping over the property. And then we have designed a carefully crafted model where we balance the cap rate with the loan. So there are a lot of properties who are carrying a very low interest rate in this market, and we offer right pricing to acquire those properties in assumable loan scenarios. So while the current loans are running into the mid sevens or even touching high or more than eight, they are we are acquiring our portfolio at 3.75% mortgages. So that gives a very, very uh, start front loading advantage to us to kind of build a good significant cash flow upfront and leverage that equity over a period of time. Okay, and our focus is also that we look at the occupancy and look at the historical NOI performance of the asset, and we carefully see the trend before we acquire. So, keeping in mind that we are still young and we still need to practice a lot, we are only focusing on assets. As a single asset, it has to come under a $10 million price. I believe we, until unless we optimize our machinery to a significant aspect, we don't want to risk all our money into bigger assets. So we will focus on under $10 million assets, and we consciously choose to take properties where the average rent is $1,000 and upwards. We don't want to deal with people in low income group where there is delinquencies in the rent, where there are problems in evictions and all that. So in our early stages of growth, we will only focus on higher quality tenants where they may be individual professionals or a small nuclear family, and they want uh, hassle-free operations and a very good experience living in a community. So that's where we are focused. So let's look at our current portfolio. We have already built a portfolio of two properties, and we are underwriting three other properties. So a total of five properties are currently part of our to be acquired portfolio. So two properties that we are in advanced stages of closing, and we are hopeful of closing them by end of this month. These two properties totally combined is a $7 million portfolio, and they are located in St. Louis, Missouri. Both are Class A properties. Both are 18 units in each property, and 100% renovated in last 3-4 years, as well as 100% occupied as of today. Very good cash flow, very good reputation of the building, very good maintenance crew working on the ground. Uh, Hardly any issues in last couple of years that we have evaluated, and these two properties are coming at a assumable loan of 3.70%. So that's a very good advantage, and we have already negotiated a very good price, bringing almost $500,000 equity at the time of closing. So these two properties are Crystal Tower and Florence. You can see the photos here. So this is Crystal Tower, 18 units building in Missouri, and this is Florence, again 18 unit from the same seller. So together, these two properties bring us a value of $7 million right at the time of purchase. There are other properties that we are evaluating. Some of you can see here. Our team is on the ground. They are evaluating. It's not just by looking at the building from outside. We evaluate a building by visiting at least few of the units inside, engaging professionals to do appraisals, inspections, and then only we finalize whether this property fits in our acquisition strategy or not. So let's come to the last part of the presentation where what's in it for you? What kind of opportunity you guys have to participate? So before I jump into that opportunity, I would go with the standard disclosure that this is not an investment advice. This is a discussion that I'm putting across to you guys as an opportunity, but individually, you guys have to do your own informed decision and evaluate on different parameters. We are not an advisor, we are not a broker, we are not registered with the US Securities and Exchange Commission for any of these services. So please bear in mind whatever we speak. This is more of an opportunity discussion that you need to evaluate at your own end. So what I offer to you guys is be part of this movement, which I proudly call as a financial empowerment movement, and invest with us. So US Rain Fund is an organization, is a company which is inviting people to become members by investing or purchasing the units in this company. So whatever you invest in the company, that capital is going to be used to acquire properties and run the operations, and you are going to get membership benefits by being the owner of that portfolio. So currently the company is raising $25 million, and it's in two different classes. Class A, we are offering 50,000 units to general public, uh, and we do have limited to accredited investors only. Class B membership units is 175,000 units available for purchase. So in a nutshell, here is the overall kind of summary of what this offering is. So as an accredited investor, you have an option to purchase either a Class A or a Class B, or a mix of both Class A and Class B together, by investing a minimum of $25,000 into this company. So key point is that you need to be an accredited investor. You need to bring minimum of $25,000, and then you can invest either in Class A or Class B. And if you so choose, you can invest in both the classes. In any single class, it is going to be $25,000 minimum. So key difference between Class A and Class B is that Class A is more suitable for people who want to have higher passive income, but do not want to uh, get into the speculative growth of real estate. So Class A do not get benefited from the capital gains of real estate, but they leverage, they use significantly higher passive income, and their lock-in period is 2 years. So after 2 years, they can withdraw their capital if they so choose. If they want, they can continue investing with us, and they will get 8 plus 3% passive return. So 8% is what you will be getting on an annualized basis, but every quarter you will be distributed. So in a quarter, for whatever investment you have made, you will be getting 2% of that return every quarter, making it 8% every year. And then a 3% on yearly basis will get accumulated for you, and you will get that accumulated return at the time when you want to withdraw from the fund, or at the maturity of 2 years. So overall, it's a 11% return for Class A. For Class B, you get 90% split of the profit. So with 90% split of the profit, a projected return of dividend is somewhere between 6 to 9%. So there is no upper limit, but on a practical level, we expect that we will be delivering somewhere between 6 to 9% on an annualized basis, and it will be distributed on quarterly basis to you. A projected ARR of 25% or higher is what we are projecting. So that, what does that mean is that we expect to double your equity in 5-year terms. So if we double it in 5-year terms, then on an average, you are getting 20% appreciation every year, and roughly about 8 to 9% of distribution every year. So we are moderately projecting it greater than 25, but our kind of practical scenario runs it about 28% of ARR return to Class B investors. The Class B investor needs to hold their investment for a minimum of 1 year, and after 1 year, there is a flexible liquidation plan where you can liquidate 5% of your holding every quarter, and after 3 years, you can liquidate 50% of your holding every year, and after 5 years, you can liquidate 100% of your holding for the current appreciated price. As I mentioned, this is strictly for accredited investors. We are registered with Securities and Exchange Commission under 506(c) Regulation D. So with that, there are very strict criteria. You guys need to have a accreditation letter, and we help as a company in acquiring that accreditation letter for you. So this is something that is really required to join the company as of now. Now, as we are running, this is our first offering, and we launched it on October 7th. And this year is closing, the festival time is on. So we are offering some very early bird advantages, which is only limited till December 31st. And there are two key advantages. One, the unit price, we have kept it as $100 per unit as of today. So that means that by investing $25,000, you will be getting 250K units in the company. This price of $100 per unit is expected to grow significantly in first quarter of next year after we successfully acquired our initial portfolio. So the price will reset. You have the opportunity until December 31st to lock in this price. And if you invest more than $25,000 in a single class, we will offer you 1% bonus units of that class. So, for example, if you invest $50,000 in, say, Class B, you will be getting 5 units worth of $500 for Class B allocated at the same price of $100 as a bonus. On top of that, since our portfolio is still not acquisition complete, our distribution will start from first quarter of the 2024. But anybody who invests now, they will accumulate a flat interest of 8% for the number of days remaining in 2023. So, for example, if you invest today, whatever amount you invest today, you will be getting a interest accumulation at the rate of 8% annually, and that interest will be credited back into your account on January 1st, 2024. So as of today, getting 8% interest is anyway difficult anywhere, but we are giving it without any strings attached. So these two advantages is something that you can leverage as of today. As soon as you invest, you start accumulating 8% interest, and you will get bonus units if you invest more than $25,000, and your price until December 31st is locked at $100 per unit. So with these advantages, I think it makes a good investment decision. And just to recap, there is a very flexible liquidation plan. So most of the investment in syndications or multifamily funds is long-term investment that gets locked out. Here we are offering you for Class A, minimum holding is 2 years. You can withdraw 100% after 2 years. For Class B, you have liquidation starting from after the first anniversary of your investment. After that first anniversary, you can liquidate 5% every quarter, making it complete 20% dilution after the completion of 1 year within a year. After completion of 3 years, you can sell off 50% of your holding, and after 5 years, you can sell off 100% of your equity. And for Class B, this will keep on appreciating. So the $100 unit today may become $150 in 3 years terms. So you will liquidate at that price. So this is again a very unique model that many syndicates and funds will not offer you any liquidation before 3-5 years. But here we are offering you liquidation just after 1 year completion of your anniversary. So with that, I think this is end of my portion of the presentation, and I now open up for anybody and everybody to ask questions, bring in any kind of topic to discussion to clarify it further. And I will encourage you guys to reach out to me personally to do any one-on-ones if you need any more discussions. We have our team members here who can take your questions offline, and feel free to connect and reach out. We look forward to having you join us and uh, get the benefit of this collective wisdom and a higher scale of efficiency to achieve the benefits that we have talked about. Thank you all.